And welcome back to Capital Market live on Channels Television. You can tweet at us just in case you have some reactions to these discussions we've been having. But we had just 3 days of trading this week. And before we catch a glimpse of what to expect next week, let's review the just concluded sessions, starting with the equities market, which overturned 3 weeks of negative sentiment, with the index shot up by 45 basis points week on week to close at 35,426.17 points. Now, the positive performance was driven by a 6.82% price increase in Dangote cement, which masked declines seen across the banking counters. And in terms of the sectors, you've got the banking sector as down by 3%, and the insurance sector under the financial services now was up 78 basis points as investors continue to react to the recapitalization guidelines that came in from NICOM in recent times. Consumer goods sector was down 2.18%, while oil and gas eased by 23 basis points, and the industrial goods sector, given the impact of Dangote cement, was up 1.96%. You look at the NSE 30, that was down across board week on week to 48 basis points, by 48 basis points, and month on month by about 5%, year to date 9.03%. Over to the unlisted securities market, where the USI appreciated by 33 basis points to 694.78, since that index climbed beyond the 700 psychological line. Profit taking has brought it down backwards to 690 basis points now, where with the market's capitalization hanging around 470.18 billion naira. And for the most traded volume and value this week, it was Central Securities Clearing System, that is CSCS, that performed the most. In terms of the debt market, yields in the fixed income market breached the bearish trend to close lower this week, as average debt yields dipped 3 basis points week on week to 13.6%. And this was mainly driven by a 6 basis points drop in bond yields to 14.5%, following the renewed investors' interest on the back of attractive yields at the long end of the curve. And for the Treasury bills market, T-bills closed the week flattish at 12.7% week on week. This resulted from the elevated liquidity in the system, as CBN failed to mop up the entire 364 billion naira worth of open market operation maturities that hit the system on Thursday. CBN ended up selling just 98 billion naira worth of OMO bills at existing rates. Now let's hear Gbolahan's thoughts and get some forward guidance for next week. First, we suddenly saw this sort of bullish sentiment on Dangote cement, but it was the opposite for the banking system. Why?
Okay, thank you, Temple. So really what we saw in the markets, really, if you look at market breadth, it's still pretty much negative. So really most of the stocks lost last week. But the increase that we saw in the NSE Ocean Index was because of Dangote cement, like you rightly said. And of course, it's basically strategic interest by some investors. So last week we saw
Doesn't mean it won't go lower, be lower than 240 naira as we have right now?
Well, it's possible it might hover around the current price, but of course, it's good to look at the market as a whole. So in terms of sentiment revolving around the market, it's still pretty much negative. So because Dangote cement contribute over 30% of market capitalization, so really, it's in terms of weighting on the entire capitalization, is pretty much high. So wasn't surprised to see the markets recover last week. But generally, sentiment is still pretty much low. Are we expecting any catalyst? I don't think so.
No.
So there's GDP figures coming out on Monday, but really I don't think that's going to affect the market, because pretty much it's lagging data, for instance. So it's data for the last 3 months. And really the economy has been growing. In terms of macroeconomic fundamentals as well, they are pretty much strong. But what has been causing markets to decline? Basically risk of sentiment in emerging markets, US trade war with China. Also we saw the dollar has been strengthening against all other currencies as well. There's political risk factors as well. So have all these factors gone away, really they are still very, very much prevalent. So that's why I say we don't see any major catalyst that might reverse the trend. So might see one-off spike once in a while, but in terms of the trend, it's pretty much bearish.
Is there anything the insurance sector, regulations and this recapitalization process is going to change? I know recently we've been seeing the indices of the insurance insurance sector now, ticking up.
Yes, so for insurance sector, so we expect to see a bit of combination. So mergers and acquisition as the months or days progresses.
Yeah.
And so we're going to see pretty much interest in that sector. Over the years, we've seen a lot of interest. We've seen a lot of foreign players come into the country. And of course, they've been cherry picking some of the insurance sector. So we expect to see pretty much interest going forward in that sector. Like I said, mergers and acquisition as we go forward. But I think for investors, it's pretty much you need to understand what your objectives for investing are.
Absolutely.
And if you're playing the equities markets, so I might sound like a broken record, but of course that's the truth. You need to probably invest for the long term and also invest for fundamentals. But if you're pretty much an equity portfolio, how do you play the market at this point in time? And really, a couple of options. One might be that you might reduce your weighted average cost. So, for instance, you are carrying a GTB at over 14 naira. You can buy more of GTB, so that reduces your weighted average cost. You are carrying a Zenith Bank at over 13 naira. You can reduce your weighted average cost on Zenith Bank or Flamio that's over 13 naira as well. So you can be buying bits by bits, or you can also exit the equity market, and of course, enter the money market. Money market, of course, what money market does for you is that it offers you liquidity to take advantage of opportunities. It offers you periodic income, offers you safety of capital as well. So you need to understand your objective. And also, if, like I said, if you are strictly an equity portfolio holding, just invest in resilient stocks at the moment. So stocks that they are pretty much defensive, they pay regular dividend. So you are not losing too much at the moment. So invest for the long term, but if you have to be in equity markets, invest in stocks that are resilient, pay consistent dividend, and you can also reduce your weighted average cost at the moment.
And there's a whole lot more to talk about. You've got the fixed income market where, of course, next week there will be more maturities. There will be an auction, of course, by the CBN as well. And you have a Faac allocation that will be disbursed again.
Yeah, so next week we expect the market to be awash with liquidity. So there's Faac inflow that's coming in. There's more maturity as well. But what we've seen in recent times is that CBN has not really mopped up all the maturities. So last week we had about 300 billion that was maturing, but CBN just mopped up about 98 billion.
Last week.
So we expect to see OMO issuance on Thursday, which is when it matures. There's an NTB auction on Wednesday as well.
Yeah.
But in the NTB, the trend has been that we've seen the stock rate declining auction by auction basis. So it's possible we might see a decline again in terms of stop rate for the NTB auction as well. But our investors generally play in the fixed income market. So there's been renewed interest in the bond space. And of course, over a couple of months, we've seen bond yields rise up. So in the past, we've seen sell-offs by foreign portfolio investors as well.
I mean, isn't that attractive enough? Are the yields
yeah, so
attractive
for
enough?
some of them, we are seeing renewed interest.
Okay.
Yeah, so that was what also contributed to the contraction we saw in bond yields as well. Okay. So you understand that there's an inverse relationship between price and yields in the bond space. So of course, if you are seeing demands, we expect yields to decline, which was what we saw last week in the fixed income space.
So international bureaus, let's go back a bit to the equity market now. International bureaus looks to launch its plans next week. I think the one in Shagamu or so. We are also going to be having a bit of dividend payouts now, interim dividend payouts, 30 kobo by Zenith Bank. Any form of sentiment that is expected to drive?
Well, for a lot of investors, they factored in a dividend in Zenith Bank. So I don't expect that to pretty much bring about renewed interest in the stock. But of course, if you're holding Zenith for the long haul, of course, it's additional income for your portfolio, which I think is good. So generally, I think when you're playing the equity market now, you just need to be safe. I kind of afflog it, invest in fundamentally viable stocks, invest in stocks that are a bit defensive. So by defensive, I mean that they're not going to probably decline so much in relation to the entire market. And also, if you don't have to be in equity markets, you can shift your asset allocation to more of money markets. And of course, when you ensure that the market is going to recover, can re-enter the market.
Bolaho, thank you so much for making it down to capital market again. Thank you so much. Bolaho is the head of investment at Quadras Capital. And of course, you're available on Twitter, actually. So if you got some more questions, get on Twitter and look for Bolaho. My own handle is at CTV Tempili and of course at Channels TV. Just in case you have more questions to ask, go on Twitter and let us sustain this discussion. That's the show for this weekend. Thanks for watching. I'm Temple Ashaju. I'll see you next time. Bye for now.